Okay, I think we're live. Just about half an hour after 1 p.m. London time. I think I'm a bit late for this session, but that's absolutely fine. So we're going to check out, of course, as usual, what kind of trading opportunities we have right now, and do we actually have any entries? And if not, obviously, then what we can look for. So what I'm going to do is I'm just going to quickly send a message in our free Telegram channel to let people know that we are actually live. And if you haven't joined the free Telegram yet, make sure to do so. There's all the links you need in the description below this stream. There's also links to our website, and that's where you can find a lot of free content. But most importantly is probably the free Telegram channel. So make sure to join if you haven't already. That's where I send out daily updates on euro dollar. So if you just give me a second to write a quick message. In the meantime, you guys let me know if you currently have any trades and um, or basically how is your trading going. Whatever kind of questions you have, you can drop them in the comment section, and you can also send me a message, a private message on Telegram to find my contact. Just join the free Telegram. That's where I leave it below, pretty much below every post. But anyways, do you currently have any trades on either euro dollar, pound dollar, maybe gold? Okay. Also, the yen cross pairs are currently running pretty well, and these are some trading opportunities that we talk about on a daily basis in the premium Telegram, which is for serious traders only. Um, okay. Fine. I think everything is running smoothly. So we may start with euro dollar. And from what I can see here on the higher time frames, it looks like we've got the beginning of another move to the upside. Now, for me, this is not the pullback, because a lot of people would look at this move right here and they would say that this is the pullback of this previous move. Now, what you need to focus on is the bigger picture, meaning that, let me just move that pen over here, meaning that overall we are in a bullish trend. So actually, this is the main move, and then this is the pullback. It's not the other way around. We're not looking at this as a pullback, but this is the pullback. So in this case, that means that this right here is the continuation of the uptrend that we previously had. So we managed to wait for that pullback to end, and right now it may be time for us to look for entries. The only thing is that if you drop down to, let's say, the 1 hour chart and you're looking for entries, well, right now we are trading at previous resistance. Not only that, well, current resistance. Not only that, but obviously we've got all that price action structure right here, but we've also got this rejection wick. Now it may be a little bit different depending on the broker that you use, but overall what I'm trying to say is that we may have another rejection right here at that level. So if we have another one of those wicks and then we have a bearish candle closing down here, it's not going to look good, and it's not going to be a good signal that price will eventually continue higher. So what I would do in this case is either wait for price to give us a pullback and then a strong confirmation, okay, something like this. Then I would look for a continuation trade, or another way would be to wait for price to break above the current resistance and then create a higher low, okay. Then in this case, again, we can look for continuation trades to the upside. So what if we drop down to a lower time frame? For me personally, I don't really see any decent trading opportunities. Now, if I have to take a trade, I would probably look, and this is purely price action, okay? Like I said, I wouldn't take a trade like this, but if I have to take a trade, I would be looking for price to take out this low and then retest this structure right here. So basically bearish price action short term, and then eventually, you know, move like this. But as I said, this is not a trading signal. I'm not taking a trade like this. Why? Because I'm focusing on the higher time frames. So even though I may be looking for a pullback towards 1.1670 roughly, to then potentially take a long trade on, let's say, the 5 or the 15-minute chart, when I look at the 1 hour time frame, it doesn't really make that much sense, because we can easily drop further to the downside and then we can see that reversal. So in this case, we would have a losing trade already, just because we are focusing on the 5 and the 15-minute chart. All right, so all I'm trying to say is that you guys have to be patient, and if you are looking for entries, I would probably look at the yen cross pairs. Hi, Mikhail. Why? Because, you know, if you look at euro dollar and pound dollar, we are currently at the peak of the most recent move. What I'm trying to say is this bullish move right here. So we're trying to enter a long trade, and then we're trying to buy at the most expensive price. Okay, talking about this move only. So that's why it doesn't make a lot of sense. Now, if let's say we had a move like this and then we have a rejection, that would look much better, because this gives us obviously better risk to reward ratio. Okay, so again, when it comes to pound dollar, it doesn't look as good, even though it looks like we had the breakout right here and we kind of have the retest now. But still, I'm not happy with this setup. I'm not trying to enter this one. Instead of that, we've got some bearish price action here on the yen cross pairs, okay, which is again not ideal when you're trying to enter a long trade. But let's see how it goes. This is the 4 hour chart. We still have some time to see how those candles are going to close, and not only that, but also what kind of reaction we're going to get down here at the lows. For me, best case scenario, I see price dropping down here and then quickly recovering. Now, if I see a setup like this, I'm most likely going to take a long trade, okay? Not just because we have stop loss hunts, but also because we know what is the main trend direction, okay? And we can clearly see that we are in an uptrend. Okay, so remember, this is the 38.2, especially when it comes to pound yen, and we've seen more bearish momentum on pound yen on the pound recently. So that probably means on pound yen, I'm not going to be surprised if we drop all the way down to 61.8. As long as we get that reversal, we are going to be looking to take a buy trade. Okay. Same thing with euro yen. We've got the 38.2 down here at 170.80 roughly. So this is essentially what we're going to be looking for. You know, I do, well, hold on a sec. I need to adjust my fib right here. So pretty much trading around the 38.2, which is in this case is 171.40. Now, we also have this previous low. So, you know, I want to see price pushing a little bit lower, okay? For me, it doesn't look like a trend reversal, but the way the daily time frame is setting up, this may be kind of a deeper pullback. Let's see what it looks like on pound yen. Yeah, obviously we're losing some momentum right here. Price action is not as strong as it was down here, but it's only a matter of time, I feel like, for price to actually reverse. Because, you know, we may be looking at this bearish momentum right here, and, you know, that makes us think, all right, it's probably not the good time to enter a long trade. But what will happen if the next hourly candle closes like this? A strong bullish engulfing candle. Because if we get a signal like this, well, then obviously this is a strong reversal pattern. So let's see how it goes. Right now, I wouldn't be taking any entries. Now, the other instrument which I do like the way it sets up is obviously gold. However, when it comes to lower time frame entries right here, again, there's no point to enter a long trade all the way up here. I really don't understand when traders do that because it's really common sense. You don't even need that much experience in trading to kind of figure out that this is not the best entry. Why? Because you're trying to enter a long trade. You're essentially buying. And price right now is at the highest point where it could be. So if we're trying to buy, we actually want to see a drop in price. Okay, so let's say we have a retest of the lows. Down here we have one of those pin bars. Then we can look for buying opportunities because right here, down here, you get at a discounted price. Okay, like I said, it really is common sense. All you have to do is just put some thought into it. And then there is the other hard part of trading. How do you sit on your hands tied without entering a trade when you know you're not supposed to enter a trade? This is something that I talked about with a member of ours, I think just yesterday. Okay, there's really a couple of ways to learn that. One way is the smart way. You hear what I say, you learn from the mistakes of others and you don't do the same mistakes. But then there's the more difficult way, which is you lose a lot of money and then you learn how to actually be patient. It really is your choice. So when it comes to all of those instruments, I am bullish biased. I'm not going to be looking to enter a sell trade on either one of those. And then there's another thing as well. What happens if, let's say, we are currently in a pullback like we saw? Then we have this bullish price action, but we have another strong rejection, just like this one right here. Now, this is going to be a signal that this pullback that we had before that may potentially continue lower and maybe even break below, but if not, at least retest the previous lows right here. So if we are expecting that price action on the 1 hour time frame will cover a distance of roughly, let's say hypothetically, about 100 pips to the downside. What does that mean? It means that you can, eventually drop at a lower time frame and then look for the same pattern in the opposite direction because, anyways, you are expecting for price to continue lower, right? So would you take that trade? Now, in my personal opinion, if you're going to do that and trade against the trend, but then also trade with the trend, you have to be very calculated in how you manage risk, how you manage your trades, and then whenever you do analysis on your account, you have to take into account that you've got trades in both directions. So you have to know how to properly analyze your account, your results, in order to know what to improve in the future, if that makes sense, right? But I'm personally not taking trades like this. If I know that price could potentially reach this low and then give me an entry in the direction of the trend, for me it's as simple as that. I'm just gonna wait for this pullback to finish and then I'm gonna look to enter a trade. But no, there are people out there who are trying to catch this move and then they try to catch this move and then they wonder why they have so many losing positions. Okay, so for me, best case scenario, it takes a little bit more patience, more discipline in your trading, but best case scenario is to only trade with the trend. And whenever you have, pullbacks like this, you just have to wait out for those pullbacks. Sometimes you have to wait longer. For example, a couple of weeks. Can you do that? You know, in this case, you can turn to another instrument, all right? When you are trading with the trend only and trading with the higher time frames, you can allow to have more instruments on your watch list and take more trades on, separate instruments. This is absolutely fine. Whereas if, for example, you're trading the 5 to 15-minute time frame and you're trading in both directions, I would only recommend you to trade one instrument and not more. You guys let me know if you agree with that. What do you think? I'm sure most of you, or at least those of you who have some experience in trading, would agree. But yeah, definitely gold. So for those of you who are using the volatility expert advisor, um, there were some people that were in drawdown during this time, but then as soon as price came back to around the same levels, even right now, eventually, as you can see, we haven't actually broken above that level, okay? And the expert advisor is already generating profits, okay? Because all those buy positions that were open during that bearish move, all of those positions have now been closed in profit. So there are people out there using the volatility expert advisor who are just profiting now as price is going back to the upside. By the way, if you don't know what I'm talking about, you can head over to our website, trendlineforex.com. Let me just put it up right here on the screen. Let me see if you can see that. That's right. For those of you who don't know what I'm talking about, you can go to trendlineforex.com, click on that volatility trading button right here, and then you can check out this page. Okay, have a look at those videos. There are really some short videos explaining what the VTS does, and then you can check out some of the results from my FX book verified accounts. Some of those accounts are ours that you can see on our page on my FX book, and then some of the accounts are from our members. But this is an expert advisor which will automate your analysis. So the idea is that this robot is not fully automated, so we're not promoting this as one of those expert advisors that you just attach to your chart and it starts generating profits. That's not how it works. The idea is that you have an analysis. You can then choose a zone. Let's say price is trading up here, and then you say, all right, if I get a pullback to, let's say, 3,340, and I'm expecting that this pullback may end down here around, let's say, 3,250. Well, now I have this zone, okay, around $100 of a zone. I can set up the expert advisor to start opening buy positions right here, and essentially what it does is it splits your risk into multiple positions. And that could be 100 positions if you want to, even more than 100 trades. And then as price is going down, it will open buy positions. And then eventually when price turns around, you will close those trades in profit. And you don't really need for price to actually complete your analysis. You don't really need that much of a bullish momentum or bullish trend to continue. You only need for the market to stay within this area and trade uh, in between those levels that you set before that. Okay, this way you will be generating profit every time a position is open. It has a take profit, and then once the trade is closed, if price pulls back again, it will open that trade again, and then it goes back to the upside. It will close that trade in profit, and it will keep doing that while price is trading sideways. All right, meaning that you are going to be generating profit without even the trend continuing in your favor. Okay, I know it may sound weird or kind of impossible, but just check out the page that I just showed you. Okay, and I've also got a full webinar here on this channel. It's a recording of a webinar. It's about a 14-minute long video. This is where I explain in detail how to use the expert advisor. Okay, so keep that in mind. Whenever you got some spare time, make sure to check it out. Trendlineforex.com/n/volatility dash trading dash system. Check it out. Okay. In fact, I'm gonna send the link right here in the chat box. And whatever kind of questions you guys have after you check out this page, you can get in touch with us, and I'll be more than happy to answer. Also, my most recent videos, not the live sessions, but the videos here on this YouTube channel, they're basically a proof of how the expert advisor works on live accounts. Okay, we've got 3 separate accounts that we show on this channel: euro, dollar, pound, dollar, and gold. And each one of those accounts is traded solely with the expert advisor without us taking any manual positions. So whatever kind of results you see on those accounts, it's all done by the volatility trading expert advisor. So, I'm looking at gold. It keeps pushing up. It's nearly 2 p.m. London time. Another couple of minutes and it will be. So far, we are trading around the same levels. I'm expecting to see a little bit more volatility coming in. Um, but for now, gold is the only one that really pushes up. And then we've also got this bearish momentum here on pound yen. So I'm not the kind of person or trader that uses, pending orders, especially when I'm manually trading. But, you know, if I would do that, I would probably place my pending order right around 197.100 because this is where the 61.8 is. But again, listen, this is, I would say, the disadvantage when you are trading manually, even if you are using pending orders. Because let's say we expect for gold to continue higher, right? We see this bullish trend right here, excuse me, pound yen. We see this bullish trend right here. We see that we are currently in a pullback. So that means we're approaching our buy levels. So let's say our analysis says that we want to see price breaking below that support and reaching the 61.8, and this is where we want to enter a long trade. Okay, so what is the issue when you're trading manually or using pending orders and doing this kind of analysis? Well, now, first of all, you're not going to be triggered into your trade if price doesn't actually test this level. So let's say we come down here, but we don't quite test the 197.06 level, but instead of that, we turn around at around 197.20 up here, and then price goes in your favor and continues ripping through the upside. What is the issue here? Well, you was right about your analysis. You were just a few pips off of your entry. So you didn't get triggered into that position, and now the market is gone without you and you're not making any money. What is the other issue? Well, what if price comes and tests that level, but it then continues dropping down? Okay, so even though you may have the confidence to keep that trade open and that it eventually will turn around, you are in a drawdown right here. Okay, and you can't really do nothing. You can either close a part of your position to limit your risk. You can close your full position if you don't have the patience or if you don't have the confidence in your strategy, or you can just take the damage and hope that the market will reverse. Okay, but when you use that volatility expert advisor, the idea is that if this is where you want to enter, then that means you're going to start buying from up here and you're going to end buying down here. So you don't rely on one single level, you actually rely on a zone around that level. Okay, so now if price test this level, you're already into some buy positions. Okay, if it continues past this level and it then reverses right here, you've already made profit that you can now close without the market even giving you bullish move after testing the 61.8, if that makes sense. Okay, if it doesn't make sense, again, you guys have to watch the webinar recording. And also, not only that, but we also have a full course which is completely free right here on our website. You click on services, you go to advanced, and then this one, the volatility trading system. This is a completely free full course, 20 videos, 139 minutes duration, and you can watch each one of those videos and you can find out more about the expert advisor, how it works, what it does, and things like this, and how it can actually help you in your trading. And again, for those of you who have some questions, make sure to drop them right here in the chat box or message me after the live stream that I'm doing right now. I'm looking at pound dollar, still trading around the same levels, haven't really moved much. Same thing here on euro dollar, I believe. And then again, gold is the only one that is pushing high. I feel like it may take some time until we see price calming down, because there are times, especially with the yen cross pairs and also with gold, where price goes in a certain direction and it keeps going, even increasing the momentum. I'm sure you guys have noticed this. It happens very often here on gold, on let's say pound yen, on pound Aussie, I believe. So yes. Now, in the premium Telegram earlier today, when we sent out the video analysis and the setups that we're looking at, we do have some other trading opportunities that we're observing. Price action looking good at some other instruments. But for now, we're going to stick to those six that we currently have, or five: euro dollar, pound dollar, gold, euro yen, and pound yen. And especially now, it's very important to actually follow price action here on the cross pairs, because I am expecting a continuation of the bullish trend. But the thing is, are we going to get the entries on the cross pairs sooner than we would on euro dollar and pound dollar? Because sometimes it takes a little bit longer for the majors to actually find a clear direction, whereas you can clearly see what is going on here on the cross pairs. A bit of a different story, right? The 197.10 level for GBP JPY is definitely looking good. But there's something else as well. I don't want you to literally take what I say, meaning that if price comes down to the 61.8, I'm not immediately going to enter a buy trade expecting that it will reverse right away. Okay, first I need for price action to come down here, okay, confirm that there is a reversal, and then I'm going to be looking for that continuation, not entering a trade before that. Okay, so the good thing about euro yen is that we've already taken out those previous lows right here. So we're currently trading below those. We can potentially drop down to retest the previous low, and then we can reverse. But for now, it's mainly a patience game, nothing else. I've said it many times in the previous sessions. I do prefer pound dollar over euro dollar, but recently pound dollar has had a lot more bearish momentum, which I didn't really like, because it's usually the pound that is stronger um, than the euro dollar pair. So, in most cases, I would expect whenever we have a trend that pound dollar would move quicker, but that wasn't the case recently. And so I'm still trying to find out whether these are the bottoms in the market. This is the 4-hour time frame, so we have a perfect reaction off of this previous low. Okay, but is this where price will eventually reverse, or are we going to see another dip and then a reversal? Okay, always be aware of those traps in price action, because the market needs to trap you to be able to liquidate you, and grab that liquidity and continue in a certain direction. So what that means is it's very obvious. If you are going to be looking to enter a long trade, you're going to place your stop loss below those lows, right? It is very, very obvious. You know that price has reacted right here. We then have a retest of that level. So we're now reacting right here. So it looks like we're not going to go any lower, but instead of that, we're only going to go higher. So that's why people would place their stop losses down here, expecting that they're safe. And then what the market does is it comes right here, wicks them out, takes out those stop losses, and then continues to the upside. So is this going to be the case now again, or are we looking at a reversal as we speak? What else do we have? We also have some important news. I think tomorrow, right? Or no, on Thursday. So let's have a look. We've got the ECB interest rate decision. That's right. So what I'm gonna do, I'm just gonna choose the high uh, impact news for this week. Okay, so there wasn't much of a reaction on pound dollar earlier today. Um, what do we have? So tomorrow we ain't got nothing tomorrow, so it's purely going to be price action and technical analysis. But then on Thursday we've got news from the European Central Bank, and then an hour later, after the press conference, we're gonna have some high impact news for the US dollar, which I'm really not expecting to affect the market that much. But during the policy statement here from the European Central Bank, we can definitely see more momentum coming in on euro dollar and euro yen. Of course, I'm only talking about the pairs that I have here on this watch list, and basically what we normally look at during those live sessions. But you have to be aware that there are ECB news, meaning that any pair with the euro will most likely be affected. So if you're trading euro pound or euro Aussie, for example, uh, you have to be aware that we have news tomorrow. Not tomorrow, on Thursday. Tomorrow is Wednesday. Of course, I got it wrong. That's because we don't have Wednesday right here. It's alright. Just one of those days, right? So far, we're still bearish on the yen cross pairs, so not any potential signals yet. Still bullish on gold, so we may be waiting for a pullback, and we may never get a pullback. But that's the thing. A lot of people think that this is a bad thing. It's not necessarily a bad thing. Of course, the ideal uh, situation would be to enter a trade and then get the bullish momentum. But hey, it doesn't happen always, right? So I do like rejections like this, similarly to what we have on euro dollar on the 15-minute time frame right now. But in this case, that is not enough for me to enter a long trade, because when you look at the 1 hour chart, it's not like we have a pullback, but this may be the beginning of a pullback. So if that's the case, then we're going to see price coming lower, and this is where we would love to start looking for buying positions. Anyone watching, do you guys currently have any trades? What we did say in the premium telegram earlier today was that whoever managed to get into some long trades on euro dollar and pound dollar at a lower levels, let's say right around the reversal right here, then it's best to leave those trades open. And so if price starts approaching your entry level, you can get out of your trade, okay, and then wait for another chance to enter. Uh, because if you manage to get an entry here on euro dollar, for example, around 1.16, and then price comes all the way down here, that probably means we're gonna see a continuation of the pullback. Now, not necessarily this is, uh, it's not a fixed rule or something like this, but All I'm trying to say is that if we see some momentum coming into the market, we want to see that momentum continuing. Okay, we don't want to see price, returning back to the same levels where the momentum started, because that means that we have as much bearish momentum as we have bullish. Okay, so there's not it's not like we have more buyers in the market, at least for that certain period of time. But for now, you know, I don't see any strong pullbacks on in the opposite direction, meaning bearish. So, when it comes to entries, if we really want to take a trade here on the majors, ideally we want to see, forming of a higher low. So if we get a signal like this with a higher low, higher than this previous one, this is going to be a good entry signal. Now, when I'm drawing those candles like this, long rejection wicks or a bearish one, what I'm essentially looking for is for those types of candles. I can see one right here. So let's say, for example, this one. Okay, why? Because we have, or this one as well, because we have a long rejection wick to the downside. Okay, you can clearly see that in both cases. So that would normally mean that we, we could potentially see an end of the bearish move. Then we have this strong rejection right here, and then we can look for buying opportunities afterwards. Now, there are going to be some candles which wouldn't affect price action the same way. So, for example, this one, because yes, we do have a few consecutive bullish candles afterwards, but as you can see, the pullback continues. So that's why we have to combine this, the candlestick signals and patterns, with key levels, okay, and also obviously the overall trend. Then you're gonna increase your win rate by trading those pure price action signals. We talk about all of these in our courses, in our mentoring program, in the premium Telegram channel on a daily basis as well. Whenever there is a candle like this, we will guy notify you each morning with the video that we release in the premium Telegram channel. And by the way, for those of you who don't know, this is where we share daily setups on most of the instruments in this watch list right here, including the majors, dollar yen, the yen cross pairs, some of the other cross pairs like euro pound, euro Aussie, you know, maybe Aussie dollar, and then of course on a daily basis we check out the chart on gold as well, and we tell you where are the levels where you should be looking for your entries. Okay, not only that, but we also go through Bitcoin and Ethereum in those daily video analysis in the premium Telegram channel. What's going on with Bitcoin right now? It is trading sideways. This is the 4-hour chart. Okay, trading around the 118,000 level. Eventually, I feel like we're going to see that breakout pretty soon. When I say pretty soon, of course, I don't mean in the next 10-15 minutes. I'm talking about, in the next couple of days, maybe tomorrow, could even happen today. But I don't think there is any point looking to sell within this market. Okay, why? Well, obviously we have a very clean, clear, and defined bullish trend right here on Bitcoin. So there's no point looking to trade against it. We don't want to counter trade the trend. We want to trade with it. So that means looking for buying opportunities only. Now, setups like this. So here is what we have on the daily time frame. So far, a really nice bullish candle. And then you go down to the 1-hour chart and you may start looking for entries. But this is what I mean. Right now, we are at the peak of price. We need to wait for the market to give us a pullback. Then we can potentially look for buying opportunities. Okay. Now, what are the next targets for gold? We're talking about 3,450. Why? Because obviously we have this high right here. So 3,450 is the next target. Then we have 3,490, or basically 3,500. And then we also have some levels above that we're going to mention and talk about in the next live session. We're going to do one on Thursday as well. But the one on Thursday is going to be earlier, meaning the London session, or 8 a.m. London time. And then obviously next week, again, we're going to be doing some more live sessions. We do one of those each Tuesday and each Thursday as well. Guys, if you haven't subscribed to this channel, make sure to do so. There are other videos coming also, but so far it's looking good. Everything is going according to our analysis. All we have to do is to be patient and wait for some pullbacks in order for us to enter a trade. So even in this bearish price action that we see right here that we had previously, I was talking about waiting and waiting for key levels where we could potentially see a reversal. We already got one at the 61.8 or 1.16. Whoever managed to get into some entries right here, down here, then that's fine. Like I said already, you can keep your trades open. If price starts approaching your entry level, you can then close those trades. If you don't want to, if you're confident that it's going to reverse without, let's say, breaking below this low, then you can leave your trades open. But we can never know for sure, right? The only thing that we can do for sure is manage our trades accordingly and manage our risk as well. So let's say, for example, if you entered a long trade down here on euro dollar and pound dollar, and then you also entered a long trade on gold, and then all of those instruments are actually bearish while you are in a long trade. When I'm saying that we have to manage our risk accordingly, that means that we now have three positions moving in the same direction, all of them about to go into drawdown. So do you really want that, or do you want to close those trades at break even and then just wait for the reversal? Okay, so once you have another confirmation for your analysis, then you can look to re-enter that same setup. You may have slightly worse risk to reward ratio, but it's not a big deal. It's still better than having hit your stop loss just before that, right? All right, there's not many questions on your side, guys. I think I'm gonna end the session right around now. Again, we're looking for continuation to the upside on euro dollar, on pound dollar, and on gold as well. And remember, this is very important. If we get around current price levels, if we get some strong rejections, okay, meaning that we have some rejection wicks to the upside, that probably means we're going to see another bearish move, okay, another bearish leg. Uh, and then in this case, in my opinion, it's probably best to wait for that bearish move and then wait for price to again a reverse so we can then look for entries. But if you want to trade this to the downside, if you get a strong rejection, you can do that. You can give it a try. Just drop down to a lower time frame and then just look for the most basic setups because they still work. Whenever you're trading in the right direction of the market, even if you're looking for break and retest setups, this is still going to work. Okay, so every time price breaks below previous structure, you can look to enter sell positions and make sure to move your stops to break even as soon as possible, especially when you're trading against the main trend, something that I wouldn't normally recommend. So we have euro dollar, we have pound dollar, obviously we have gold as well, and then we have the yen cross pairs also. So even though we have this strong bearish move, it doesn't mean that we are reversing the trend. Of course, not yet. We may see a deeper pullback, but that's why we use the Fibonacci retracement as well as other key levels to look for potential entry opportunities. Okay, another one would be 196.85 down here, because as you can see, this level has been tested multiple times. Okay, and every time price comes that level, it will react to it. Okay, so maybe the same thing is going to happen now. This also aligns with the 61.8, which is 197.12.10. So right here we have this area or point of interest, I would say, where we could potentially look for a bounce off. Okay. um, For those of you who haven't joined the free Telegram channel, guys, make sure to do so. There is a link in the description below this video. You get to join completely for free, and you will get daily updates on euro dollar, as well as other updates about what we do and any new products that we release, or any new free course that we release, everything, you're going to get notified. You're going to be the first to know if you are a part of the free Telegram channel. And if you actually want to improve your trading and get your trading to the next level, then I think the premium Telegram channel is the right place for you. We do not send trading signals. Okay, you can never learn how to trade on by yourself that way. But instead, what we do is we share our point of view and market direction on multiple instruments, giving you the key levels, giving you the the market direction, like I said, and you will know each and every day whether you should buy or sell a certain instrument, and this is going to remove half of the stress from your trading. And then, of course, if you already have some experience, if you're ready to level up, you can then take advantage of the Volatility Expert Advisor. If you don't know what that is, check out the link in the chat box. It will take you straight to that tool. If you want to learn more about it, we have a completely free course, so you can check out that as well. Any questions, guys? I'm open to you. I can, answer any question you have regarding trading. You can find me in the free Telegram channel. There is a button below each and every post that says message us or private message. You can click on that button, and it will take you straight to my chat where you can send me a DM. So whatever kind of questions you got regarding, the live sessions, the free courses, the Volatility Expert Advisor, strategies, or how to improve in your trading, make sure to drop a message on Telegram. I'll see you guys in the next live session, which is going to be on Thursday, 24th, at 8 a.m. London time.